morning. I'm Maiki Oreta with the latest in business here on the Bilyonaryo News Channel. As investors look for more ways to invest, real estate investment trusts or REITs have become a viable option for investors since their introduction in the Philippine market in 2009. We recently spoke to Eduardo Francisco, the president of BDO Capital and Investment Corporation. He talks to us about the potential and opportunities for REITs in the country. So far, investors have been shunning stocks in favor of bonds this year. Why should they be looking at REITs?
Oh, good question, Mikey. REITs are in a way like a hybrid or a compromise, because you're right. For equities, the values can go down, which is what happened despite the good returns of our companies. No, it's just really sentiment driven. Fixed income naman, the bonds are fixed. You can get, let's say, for an Ayala, 5.5% to 6%. With the REIT, for example, a REIT, you can get around 7.4% yield. So a REIT gives you almost like a fixed income, a regular dividend yield, but it has upside because there's appreciation of property prices. So that's why it's a safe asset class, and that's something also that some of the investors, such as the insurance companies and the trust companies of the banks, have been investing in REIT because it's safer for their investors.
Yeah, it's that nice hybrid that they want. Okay.
Yes.
Let's start with an overview of the Philippine REIT market. How did we do in the first half, and how are we poised to be now, given that the BSP is going to take a less hawkish, more dovish stance on monetary policy the second half?
Okay. So in general, of course, the PSE index has basically remained flat. They had some gains in the first part of the year, and then they've been erased. With the REITs naman, they've been relatively flat, okay, because their yields have been the same, very good. What happened though is that the prices went down when interest rates went up because they were hit. But since we're already in a high interest rate environment, the yields were roughly the same, prices were the same. So compared to the PSE, the REITs have been up around 5 to 6% above the PSE, which is flat. So overall, that's a safer asset class.
It's been 4 years since Ayala's a REIT listed on the Philippine Stock Exchange. There are currently 8 REITs in the country now. How would you describe the pace of growth of the Philippine REIT market and where we headed?
Okay. It took a while for the REIT law or the IR to get implemented, right? I was involved there together with Francis Lim and some other lawyers. But once we got that settled, even with the SEC, as you notice, a REIT came out. And then maybe 3-4 years ago, right, the flavor of the market was REITs. Sunod-sunod. That's when the next 6 or 7 came out. And then before the pandemic, we wanted to try a different kind of REIT because the first 7 were property related. I wanted to do an energy REIT, cash flows. So we were able to convince Edgar Saavedra and his group to do Citycore REIT. That's also done very well. The only reason it slowed down is because now when the pandemic and then interest rates went up, it was more challenging to do REITs because syempre, REITs have to have a premium over government yields. But since before government yields were, say, 2-3%, now they're at 6%. So it became the yield expectation is so high, it deterred REIT issuers. That's why we were also working on some other REITs like W Group, which is a good group, but they postponed it. So what will happen is the SMs, the Ws, other real estate companies will do one maybe next year, hopefully, or the year after, especially when interest rates come out. That's a chance for them to list again.
Can you talk to us about the combined market capitalization of this sector? Where does it
Sure. Roughly, an estimate, I would say they're roughly around 200 billion for the 8 or so. Maybe the 3 or 4 will account for maybe 100, 150, but the others are there because it's around 20 to 10. No, the market cap for REIT is around 20 to 30. So just on the average of the 8 is 250, which is already a very good amount because there are other IPOs that are smaller. You're looking at an IPO of 1 or 2 billion and then total cap of 7 or 5. This is substantial, and that's why there's already foreign interest following these REITs because it's big enough, which was the design anyway. And that's why also now, for example, if you will sell now because of the minimum size, frankly, we haven't done it yet, but I want to try it. Because of property prices, for example, in Forbes, if someone sells one Forbes house, that could be one REIT na already. Because
Yeah.
that could be already ₱1 billion, di ba? So if you have three properties lang, for example, if you sell or your parents decide to sell, they can put it into a REIT, and then there's a tax advantage and everything, and that would be also interesting already.
Yeah, the property prices, my gosh, my have they skyrocketed, right? So
Yes. Yep.
always real estate, it's a really good investment. Speaking of the different types of REITs, there are office, retail, energy, and industrial, but Philippine REITs in particular have a very large office exposure. Does this concentration or lack of diversification, does it worry you amidst the declining occupancy rates as companies continue to try to downsize or right size?
Okay, and that's a very good question. In fact, the reason we were doing mainly office REITs for the first seven was because it was pre-COVID, and we didn't know that work from home would happen. That would seem like like something we would not even have thought of. So that was the flavor of the month, and that's why most of them are office REITs. The nice thing naman, and that's why these companies are resilient, they were able to replace their, the tenants. Some of them experienced some reduction in tenant traffic, especially those with, I think one of them has a POGO exposure, but I think they're gone already anyway. But it shows you they're resilient, and because these are large companies, they're able to inject more assets with different kinds of mixes also, so that reduces the risk. Now, so there's a concentration there, but that was by design. But the nice thing is that because we have so many other kinds of REITs that we can do, and that's the opportunity now. The SMs, the Robinsons, the Philinvest, Ayalas, etc. They can do a hotel REIT. They can do a mall REIT. So that's easy. We just have to plan it for the right time, the investor. So next year, and for example, if SM finally decides to do it, initial talks they were looking at doing mall REITs. So at least it's a different kind. So there's enough there in the portfolio of these clients of ours to come out with more product.
That was Ed Francisco from BDO Capital and Investments talking about the real estate investment trusts or REITs. Watch out for the second part of our interview tomorrow. And those were the latest in business. I'm Maiki Oreta. Tune in again at noon for your midday news update. Keep it here on the Bilyonaryo News Channel, always on top.